inflation is the key word in 2011, okay? And as you just said, most economists, almost all economists, I think expect higher numbers for early this year in CPI inflation. And many of us were very surprised by the 4.9% announced by the government. Of course, there is a caveat here, that is every 5 years the government can adjust the basket of CPI, especially with regard to the weights. Okay, this time the weights of food goes down, and the weight on housing, rental housing, goes up. If you ask any ordinary Chinese family, how they feel about the inflation, their answer would be much higher than the official data, and this has been always the case. We feel like the prices have been increased by 20-30%, but the announced CPI inflation rate is only 4-5%. Okay, of course there are ways that the Statistical Bureau calculate. Okay, and I'm sure there are justifications for their calculation adjustment. So I'm not really questioning about the number itself. I think it's more important for us to focus on the issue itself, that is inflation. Okay, I think whether the number is 4.9% or 9.4%, it is clear that inflation in consumer commodities is a serious issue in China today, this year. Okay, and that is clear to me, and we can debate on the numbers, but we cannot deny the fact that inflation now is a critical part of our life and the economy, macro economy. Okay. The problem again goes back to the excessive issue of money and loans, which was justified in the crisis time. But once you issue all these monies, it takes some time to go back to the normal rate of money supply, and also there are lagged effects. Okay, when you issue so much money, say for trillion, fiscal stimulus package, and 10 trillion new bank loans, they may not have this inflationary effect in that year, but the money will chase assets and commodities. In the end, when you cannot channel all the money to where you want, say Hainan Island, real estate prices, or stock market, the money will be chasing commodities. And so that is a fundamental law of economics. With too much money, in the end, you will have inflation. You may not have it immediately, it will come. And so of course, I think in macroeconomic management, the monetary authority can offset the amount of money using many tools. For example, in China's case, we use already several times this increase of required reserve ratio, making it more difficult for banks to issue new loans. And China has been reluctant to use the interest rate tools because of many considerations. But already we saw that the Central Bank of China used twice, okay, and the interest rate increase, and most of us expect China to use 2 or 3 more times of interest rate increase in this year. Okay, so that illustrates the significance of inflationary pressure in China. Also, the government the central bank is reacting. But I know that many economists think that the central government of China, Central Bank of China, is not doing enough, and is not doing quickly enough and a large enough amount of tightening. Okay, and but it is doing it, and therefore, of course, if issuing more money will lead to inflation, then tightening, money supply will eventually, contain amount of inflation. But I would like to have a broader perspective on this inflation issue. Okay, China has reached a new point from low-cost economy towards a more middle level developing economy, which I mean that in the past, China has the luxury of relatively cheap labor, not only unskilled labor but also skilled labor. But as China, develops, now this year China's per capita GDP has reached $4,000 US. Okay, and then inevitably you will have a pressure on the labor side, and there is going to be less flow of cheap labor from inner regions to the coastal cities. And this has been shown very clearly in the past 2-3 years. After the Spring, Festival of China, especially the east regions of China, face very serious shortage of labor, and so the labor costs will go up. Of course, the cost of resources have been increasing. Therefore, given this background, China is entering a high price period. The high price period is not just about commodity price, but also about labor costs and the resources costs. And this is a new stage of development for China. And this is also inevitable, for China to move from a low-income country to a middle-income country. So I think if we put this inflation in this bigger background, I think we would have a better understanding. Especially, we would understand that it is part of the pain of China's growth, and the important thing for China to do is to make sure that the real returns to labor and resources are increasing, not decreasing. Specifically, the growth rate of wage rate should be faster than the growth of CPI. The growth rate of nominal interest rate in banks should be faster than the CPI growth rate. Right now, because of regulations on China's banks, Chinese savers are really get a negative real return, because when you save, you get a 2%, 3% return, but the inflation rate is 5%, 6%.